Hello everyone and welcome back to the channel. My name is Smart Money Mo, and in today's video I'm going to be teaching you guys how to increase your win rate, find higher quality setups, and understand price action using this full guide on the price cycle. Now before we get into today's video, I just want to quickly announce the start of a new chapter for my style of trading and for the mentorship, and that is with the new ALQ strategy. This is a strategy that I've been developing specifically for trading in 2024. It's a completely new strategy, and in my opinion I've seen nothing like it. The results have been phenomenal on backtesting. As you guys can see, this is all results from 2024. Throughout May, February and April, the gain was amazing on these accounts. You can see in May, which was the most recent month, so the most recent and apparent trading conditions, you can see we did 14%. In April it did 17%, and in February it did 19%, all maintaining very good win rates and an average RR of 3.5 RR. You can see the overall stats for this strategy are here, with a 50% gain across these 3 months, a 50% win rate, and an average RR of 3.5. So this strategy is being taught in the mentorship currently with countless, and I mean countless, hours of videos. There's ALQ version 1, version 2, version 3, backtesting, and ALQ results, all teaching you the specifics, the strategy, the way to enter, everything to do with the strategy, with countless hours of videos, all focusing on teaching you this mechanical styled strategy, which is going to help you reach profitability. And the results speak for themselves here. This is just a couple of screenshots of the many winning trades that the members have caught using ALQ. You can see ALQ1 here being used, ALQ2 here being used with EU and EU, ALQ being used here on GJ to make 1000, and here on GBP CAD ALQ was used again. This was on a funded account to make 700. So you guys can see that this strategy is very, very good to be used in 2024, and I am dropping my first masterclass on this strategy on Sunday, and that will be a live Zoom call for the members. So make sure you guys check the first link in the description and get involved with this and the many other benefits in the mentorship, all for a one-time fee of £150. That will be the first link in the description. You will get access to the ALQ masterclass when you join the mentorship using the link in the first link in the description. But without further ado, let's get right into today's video. Okay everyone, here we are on slide 1. We're going to be talking about the price cycle here, and the price cycle has 5 key steps. The first one being consolidation, liquidity sweep, break of structure, retracement, and mitigation plus continuation. These 5 steps are going to be the key steps for you to better your understanding of price action. Now you may be wondering, why is it important that we understand price action? It's because unlocking that knowledge about price action, understanding price action, is going to enable you to better your understanding of how to find high quality trades. Because you may find your average setups every single day, but to differentiate the high quality setups between your average setups, you need to understand price action. So that's what we're going to do in today's video. So let's talk about the first step here, consolidation. When I say consolidation, all I mean is a range of liquidity. So this could be, in this diagram, we have a range of liquidity with equal highs and equal lows. The important part here being equal highs, right? Because as you can see later on, those equal highs will be swept. It can be equal highs, equal lows, like a consolidation range of support and resistance. Really and truly, it can be any form of liquidity. It can be 2 supply zones boxed up next to each other. It can be a trend line going downwards, just something of that nature, which we think that price is either going to take towards the top side or take towards the bottom side. So that is the first thing, which is just a simple understanding of seeing a consolidation of liquidity. Now, the second thing we need to see is the sweep. And as you can see, the sweep here is labeled number 2, and that is right there. And what the sweep is just seeing that price takes out the previous consolidation, as we mentioned in step number 1. It takes it out. So in this diagram, we take it out towards the upside, and then we see a drop towards the downside. And this drop towards the downside takes us nicely on to step number 3, which is the break of structure. So what we're forming here is like a nice little story, right? The first key part of the story was a consolidation. The second key part was a liquidity sweep towards the upside, followed by a drop towards the downside. A very sharp and impulsive move towards the downside, leaving fair value gaps and supply zones and whatnot, right? And this impulsive and highly, a lot of momentum in this move caused a break of structure towards the downside, right? And so now this gives us a really nice range between the liquidity sweep point, so the high of this range, and this low, which is the lower low, which broke structure, right? So now we are getting a very good understanding of the current price action, as we are 3 steps in to this price cycle, right? So now that we've seen the consolidation, we've seen the sweep, we've seen the break of structure towards the downside, giving us a nice range to trade within, what we're going to do is we're going to identify where the number 4 point is, which is the retracement point, right? Price is going to inevitably begin to retrace in the opposite direction after doing an impulsive move towards the downside and breaking structure towards the downside. We've created a new lower low, and price now needs to come up to create a lower high in comparison to this overall high over here after the sweep. So where is price going to trace to? So we know that price is attracted to areas of fair value gap and areas of supply. In this case, it could be supply or demand, but in this case it would be this supply zone right here, right? This supply zone right here is where price is going to be slowly retracing towards, to eventually lead us to step number 5, which is the mitigation and then the continuation of price. So first thing, part of this step number 5 is mitigation, and that is when price taps into the retracement point, which is this supply zone. So price was retracing all along, and then we reached where price wanted to come up and mitigate to leave us with our lower high in this trend. So price came up to this point and it gave us our mitigation right here. Now the continuation, of course, is very simple, which is that price is just to continue its trend towards the downside after mitigating this supply zone and move towards the downside and maybe create a new lower low. This, if you basically break down any sort of current market that you have right now with these 5 steps, you will understand the price action that you're seeing very, very simply and very, very easily using these 5 steps. This can be applied to any pair, to any market, to any currency pair, to an indice. Personally, I would use this on my own pairs, which is usually Euro USD, gold, or GU. But I'm sure it'll work perfectly fine on indices and other forex pairs. But yeah, guys, without further ado, let's go on to the breakdown on gold, where I used this price cycle and understood the price action I was getting to get a very high quality setup and trade. Okay, everyone, here I am on the 1 hour time frame on gold, and we're going to be starting the analysis process on this 1 hour time frame. And just a quick thing is that I want you guys to be following along with the analysis. And I want you to be following along with the steps, trying to understand the price action of the current market as we go along with this analysis. And I want you guys to try and find the high quality setup alongside me, so that you can learn all of the steps from the previous slide and apply it with me in this video. So yeah, guys, let's start. The first thing was I noticed that price is in a downtrend, creating lower lows and lower highs. So just a clear visualization of the trend being towards the downside and being a bearish trend. And our most recent low being this weak low that we expect to be broken, as we are in a downtrend and lows are taken in a downtrend. So yeah, that is the low that I expect to be taken eventually if we continue this downtrend. I moved on to the 30-minute and I began to notice price was consolidating. And as we can see here, price created a lot of liquidity, especially towards the top side. We can see a trendline liquidity forming here. We can see equal high liquidity forming here. We can see, sort of a block of resistance forming here. We can see a supply zone sort of chain forming here, creating equal highs, just a lot of liquidity forming here. So I was thinking to myself that probably price will come up towards the top side and maybe drop. But I want to take things one step at a time, and I marked up my first label as this being number 1, and that is, of course, the consolidation. So now we have our first step. We are waiting for our second step, which is the sweep. And boom, there we go. We have our step number 2, which is our liquidity sweep of the consolidation of liquidity. And this is a very, high buying pressure sweep. It tells us that it was a very valid sweep as well, and there was definitely a lot of liquidity being built up here. So everything so far is very, very valid. After this big sweep, we are also expecting a very big and volatile drop towards the downside, leaving us with some, fair value gap and supply zones, etc., etc., and hopefully breaking through this low over here, which will be step 3 as well. And there we go. Price breaks structure towards the downside. It breaks this low right here. So that is a break of structure right there. And what does that lead us to? Step number 3, right? It's as simple as that. We have our consolidation, we have our sweep, and now we have our break of structure of this low, validating this this move, right? And validating all of the fair value gap and supply zones that we have resting at the top of the sweep. This is also telling us that price is definitely going to continue to be bearish, so any sells that we take will be very, very valid. So let's continue to play price. And what I'll keep in mind is that where do I think price is going to come up to and retrace to? The first thing was this supply zone, which is what I noticed. The second thing was back on the 30-minute, was just a nice fair value gap over here, which is overlapping with our supply zone. So that is very, very good, as it's telling us that is definitely a lot of things that need to be mitigated up here. So this is going to be a strong sort of magnetic point for price to come up to and reach to, which is where we come on to step 4, which is the retracement back up. There we go. Price came in and retraced all the way back up into this zone. That's 4. That's step number 4. And now we go on to step number 5. Right, so if I just delete this fair value gap as it's been filled in, and now I set my entry where the supply zone was, this is where I'm going to be entering from. As now this takes me to step number 5, which is the mitigation. This supply zone has now been mitigated, and it's been mitigated by this wick, and this is where I'm entering from in this supply zone. So we're entering at the mitigation point of this supply. And what we will do is we will wait for the continuation of this trend towards the downside, and we will target maybe this fair value gap here, or let me go up a time frame. We will target this demand zone right over there and wait for step number 5 to finish, which is the continuation of price towards the downside. Remember guys, if we're talking about the price action here, it's very, very clear what happened to us. Consolidation, liquidity sweep, break of structure, and as well as that, a new lower low was formed, right? Which is what we need to do in a downtrend, as we have over here. And now we're waiting for this lower high to be formed when price drops and continues towards the downside and finishes off step number 5. And there we go. Price finishes off step number 5, continues off towards the downside, and we hit full TP on this trade. So guys, I hope you guys were able to follow along with this process, using the previous slide and trying to remember all of the steps. We went through every single step here, and it benefited us a lot to understand where the high quality setup was, if there was a high quality setup, what was going on with price action, and it helped us to, not be confused by what we were seeing in this price action. You know, some people will see this consolidation and think, oh, I'm gonna have to switch onto the lower time frame, there's not a lot of volume, I'm gonna have to scalp. No, you wait for a sweep, you wait for a break of structure, and you enter from a supply zone after this liquidity has been taken care of. So this is very, very important when it comes to finding high quality setups, avoiding losses, and increasing your win rate. But yeah, guys, if you did enjoy the video and if you did find it beneficial and helpful, make sure to leave a like, make sure to subscribe to watch all of my other videos, and make sure to leave a comment letting me know that you found this video helpful. And yeah, if you want to find out more about ALQ and you want to enroll with the mentorship to gain all of the benefits of ALQ, learn it, be in this Sunday's masterclass and all of the other benefits of the mentorship, make sure to check the first link in the description or DM me on Telegram or Instagram. But yeah, guys, thank you very much for watching today's video, and I will see you in the next one.